everyone, and welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of June the 27th, 2016. Now, certainly no shortage of volatility this past week, as suggested in last week's Forex Weekly Outlook, that it was going to be a very, very choppy week, and I don't see next week being much different here, guys. Now that we have the outcome of the Brexit, the UK has made the choice to leave. I applaud them for that. I don't think it's a bad thing. I think that a lot of people perceive it as it will be detrimental to the UK. I'm not sure I'm in that camp. I think it actually, in the longer term, will be a positive for the UK. So with that said, going forward, let's get started where we always do with our dollar index. Now, the dollar is likely to see some gains this week. We can see that we have a classic false break of the trend line right here, which is the positive news coming out of the polls that basically the UK was going to stay in. That very violently reversed. Before the event actually happened, we can see that we paused right here on this daily bar low right here, and we started turning up. Now, our VantagePoint indicators are very clearly telling us that we are likely to see dollar strength next week. Now, that doesn't mean we're going to necessarily see dollar strength right across the board against all the major currencies, but certainly I would say against the euro and probably against the Swiss franc and maybe even the British pound. That's where we'll see the bulk of the dollar strength, but I'm not convinced we'll see it just yet against the Aussie, the New Zealand, and some of these pairs. So our key indicators, again, when we look at our predicted RSI, one of my favorite indicators, 68.1, where most people are taking this as an overbought condition. I'm saying that this trade is probably just getting started. Momentum is building. We do not want to fight the market. We can see case in point right here when the predicted RSI broke above that 60 level with a VantagePoint triple EMA cross. That led to a substantial rally on the dollar. I'll look for a repeat of that this coming week. Now, again, my concern with some of these moves from last week is that in a lot of cases the market clearly overshoots the price, and I think that that's what's happened here last week, so we want to trade it very cautiously. The key VantagePoint level for support now is 94.49. We've closed at 95.57 above all three of the key VantagePoint levels, which I'll outline here so everybody can see them. We've got our 18-day, which is our most important level right now. We've got our 8-day and our 3-day, so that comes in at 94.39, 94.38, and 94.49. with a close again of 95.57. Again, closing if we're above that key VantagePoint 18-day predicted EMA, we're biased to the long side. If we're below it, we're biased to the short side. So most of the indicators here are predicted MACD. I would like to see it get going up above this zero line to trigger a bigger move. Again, the zero line very important on the predicted MACD as to these critical levels. So we're going to watch it very closely how things play out, but to start the week, most of our indicators and most of your price flow action, etc., is all pointing towards dollar gains. Now, when we look at our equities going to next week, this is going to be a tough call as to how the overall markets are going to react to this. Now, we know, I guess the rumors are across the wire that George Soros made another big bet here on the equities going lower. I don't think that this was actually a trade based around rocket science here, guys. I've talked about this one for weeks, that basically we're approaching a known level where basically your sell orders have always come in, and each time we've approached this 2100 area or just above it, we have essentially crashed. So we appear to be in the process of that again right here. I'm just going to bring that back up so everybody can see. What I'll do is I'll bring it back into our shorter time. Now, once we've looked at the bigger picture, I'll bring it into the shorter picture so we can see that we've broken through this trend line. We've got a whole bunch of stuff going on here. The key VantagePoint level that we really want to watch for next week, let me just bring that up here so everybody can see it. We're going to bring that, excuse me. Okay, so what we're going to do is pull this over here to identify those critical levels. So for next week, we've got this is your line in the sand, in my respectful opinion, right here, 2073.60. That key VantagePoint 18-day predicted EMA that I'm going to draw everybody's attention to, which is acting now as resistance. We've broken through another substantial area that I'll talk about here that I do with my own direct clients is 2030. 2035. That's approximately the yearly opening price. So right now, the S&P 500, if you bought it or sold it on January 1, you are now losing money if you were buying the equity markets. So that's the way bigger traders, hedge funds look at things. That's how they're gauged, their performance against the index. So we'll keep an eye on this right now, but the two key levels that I would watch in the S&P, 2035, and again, this 2073 mark, very important number here from VantagePoint. As long as we're holding below that, we are likely going to make a bigger move to the downside. Now, the same would go with the DAX 30, but a little bit of a different case scenario here that I do want to point out. Now, our intermarket correlation, what we've known for the last 6, 8, 12 months is that when the DAX goes higher, the euro goes lower. So the DAX has actually ended up recovering to some degree on Friday. Could be just a minor relief rally, but watch the key vantage point level for next week if you're a euro US trader, because it's going to be an important intermarket correlation. If these equities continue to plummet, the euro-US pair may not actually go much lower. We may be able to hold on, and the euro actually could start rising. So it's not just a black and white situation or trade for next week, but for now, we've got good trend line support coming in. We'll just clear this out here so everybody can see it. Down at this 9,500 mark, we're closing the week at 9,558. So only a sustained break of this trend line down into this area will really confirm a downward bias on the global equities. And of course, we would look for the S&P to follow it lower. If that doesn't happen, then we've got to be a little bit we've got to be cautious here for next week, because I don't think it's just as clear as what some people are trying to make it out to be. So watch these levels very closely to see what the equities are going to do. Now, when we look at oil, you can see that I've backed it out to the 9-month time frame so I can draw my major trend lines in. Very important that we do that. Our key vantage point level, 49.05. We've closed very bearish at 47.64. If we go into a global risk-off scenario, oil doesn't stand a chance. It's going to move lower. Now, this is the time of year, however, where we actually do have some demand for oil. So I'm not convinced just yet that we're going to be able to hold below this trend line. I'm going to just pull this in so everybody can see it. We are below the key vantage point level, but a lot of sideways chop here so that you can see the markets come down, kiss the lower end of that trend line, and then we have bounced off of it, but not by a lot. Okay, so for this week, we're going to watch the 47 level very, very, very closely. If we break below 47, then oil is likely getting ready for a potentially bigger move to the downside. I don't think it's going to be $10 a barrel here, guys, but $3, $4, $5 a barrel is absolutely reasonable. Now, if that does happen, that is going to be triggered also by the British pound. The British pound has an incredibly high correlation to light sweet crude oil, as does the Canadian dollar. So if oil starts plummeting, we want to look at selling pound dollar and we want to look at buying US CAD. Okay, now when we look at gold, not surprisingly, gold has had a very positive reaction. We've broken through that trend line area. We've stayed above it on that triple EMA cross from VantagePoint. So basically with this triple EMA cross, it's allowed me the confidence to essentially continue to buy gold as we're going higher here. Now, this is a risk-on, risk-off bet. We've had a big move up on gold all the way up. I think we got as high as 1360. Correct me if I'm wrong. But again, can we hold up here? It's going to take a continued risk off. Now, the fact that the UK has had this vote, we could see other European countries now looking to have the same vote to leave the European Union. So this is not over by a long shot here, guys. So I think gold is going to remain supported as long as we hold above this key vantage point level, which currently comes in at 1272.26. So this is the area, the line in the sand for us. If we're going to remain long, buying on dips to 1272, that's a reasonable play, but we need the risk off scenario to absolutely continue to support that long gold trade. Now, as we get into our euro US currency to start the week, euro predominantly has a very high correlation actually to gold. Gold up, euro up. That's the intermarket correlation there. there, guys. Now, our intermarket correlations have absolutely broken down short term based on this major event risk, which was the Brexit, right? Or the Remain, whichever it was going to be. So now that we have the outcome of that, we can see that we've broken through this trend line, but the yearly opening price on Euro US, 108.50, guys, only a sustained break of 108.50 would really tell me that we're going lower on Euro US. I think there's a very high potential for a false break to the downside here. So what I want to do is just take a moment and warn everybody of that. Okay, so when everybody thinks that this is just an easy trade, shorting pound dollar, shorting Euro US, it actually may not be. Okay, so keep an eye on this. The key vantage point level, 112.51. So as long as we stay under this area, I agree shorts carry a bias. However, 108.53, watch that level very closely, and you can see we've come very close to that on Friday. Excuse me, we've come all the way down to the 109 area, but the buyers stepped right back in. Okay, so 108.53, and we need to hold below 112.51. Now the position of the predicted MACD and the position of the predicted RSI, 29.5, and we're slipping below the zero line on the predicted MACD. They are saying that we are likely going lower. But again, we have some very, very choppy markets ahead of us. So I'm pretty sure that the market's going to be looking to sell into rallies for Euro US next week, but that sentiment could change come Wednesday or Thursday. Once the shock of the Brexit is past, and then you could see actually money start going back into the euro if those equities sell off. So right now, we have a slight bias to the downside, but we do need to be cautious. The same with longs on US Swiss franc. We can assess here looking at those key vantage point levels here, which is very important to look at the critical support level, which now resides at 96.68. So we're long while above 96.68. We can see our indicators are starting to warm up here to that idea. The predicted short, medium, and long-term differences, we're also coming off this trend line that I've drawn in. Our predicted MACD is crossing the trigger back to the upside, and our predicted RSI 64.2. That is usually, guys, where we see a breakout happen. So again, case in point, we look at the RSI as it's broke above the 60 level here. We've got a predicted MACD from VantagePoint, and we've got a triple EMA cross that led from a rally to basically, by the way, almost exactly where we are right now, from that 97 level all the way up to just below parity, so about a 300 pip move. So we would look for a very similar move to happen this coming week. Can we get 200 or 300 pips? That's left to be seen, but right now it certainly looks like that's what's going on here. So that's the play there. And again, watch your 96.68 level very closely for buying opportunities. Now with the British pound, I'm not going to spend a lot of time on this for this one this week, guys, other than to say stay clear of this thing. This one here, it needs time to regain its footings here. The dust needs to settle. We need to see how the rest of the globe is going to react to the Brexit. In my opinion, this is grossly exaggerated move that is going to correct itself likely higher. It would take a real shock here to send this thing below 130. I don't see that happening, but I'm also not suggesting that we should be buyers down here just yet either. So we have to see how all of this plays out, but the indicators are certainly pointing towards further downside. Now, when I look at this, and I look at the critical level from VantagePoint, what I will say is in most cases, the further we move away from something, the more likely it is we're going to retrace to it. So the key VantagePoint level, 144.23, I would be holding out for a move back towards that area by potentially midweek, maybe Wednesday. We could move back up to this level, then we can reassess shorts. But I really think, guys, that this move is grossly overreacted. Now, I also want to point out that this was a 12% move to the downside, okay? 12%. down. I have never seen that on this particular currency pair or any other pair other than maybe Euro Swiss franc a year ago, based on that same wild move. So for now, I would say that we are likely going to move higher once things settle. I think we're going to just go sideways here for the first part of the week to see if we've got any sellers down here. Is anybody willing to sell this thing at the closing price? The closing price 136.66. I would say, in my respectful opinion, there is not going to be a lot of sellers down here. They're going to be on the sideline. If we start moving aggressively down, then we can think about getting on that train. But again, I would be very, very cautious going in to start the week here about doing shorts on the British pound. And again, I would wait for a move somewhere between the VantagePoint 3-day and 8-day. That comes in between 142.42 and 144.23. Right now, that's our sell zone, but we really have to wait and see how this one plays out. Same as dollar yen here, guys. I've talked about this one last week, that basically there's been some very good short trades here I've used on Trader Planet here on our daily trades. And we've been sellers of this thing since up at the 110 area. So can we go lower on dollar yen? There's a lot of rumor of intervention talk, guys. Just ignore it. The Bank of Japan has no power to intervene, and any move that they do will be very short-lived. They've done it before. We know that central bank intervention tends to just agitate the market. So if they start buying yen aggressively or selling yen aggressively to boost it up, the market comes in and starts buying the yen even more. So we've had some pretty heavy support here at the 104. That's collapsed. So what we want to see at the beginning of the week, can we hold below this key vantage point level at 105.92? So again, what I would say here on what I would recommend is that everybody just basically take it easy to start the week on this pair. See how those equities are doing. If those equities don't recover and they start crashing lower, the dollar yen is going to follow that lower. The risk of the Bank of Japan coming in for intervention is always going to be there. So don't let that scare you off shorts. Okay. Should we be buying this pair? At this particular time, I would say no. The indicators are warning us that we are going lower. Now we are very, very oversold on the predicted MACD, the predicted RSI. Not a lot. You can see right here when the predicted RSI broke below the 40 level with a VantagePoint triple EMA cross, we've never really recovered from this initial move 3 months ago at the 114 level. So somebody using the VantagePoint software 3 months ago starts getting short based on this signal that I show here every week. And they're holding this particular trade. They're up somewhere in the 1400 pip area here for the true trend trader that stays on that signal. So can we do that again? Well, it's possible here, guys, but I think we've just got to take it slow once again, because the dollar yen, much like the British pound, is going to be subject to extreme position adjustments, volatility. The brokers are going to be trying to run it both ways, long and short, but this will settle in. But this is the level. We broke through this channel here between 106 and 112. We then pushed down to basically the 104 area. And again, this is where we talk about, order flow here. This is a pretty easy setup for whether you're, an indicator trader or an order flow trader. You can see that we've got sellers here, but we've had buyers here the whole time, right? So then we pushed through, broke through this, and we paused right here, and then a classic break to the downside but it's the real trend, guys, was right here long before the Brexit. It was up here at the 110 area that these indicators, basically our neural index, our predicted short, medium, and long-term differences, our predicted MACD, our predicted RSI, all told us to start getting short here weeks ago that I've talked about here on Trader Planet. So these are the kind of things that we've got to watch for, guys. These are the kind of trades we look for. Try and weed out the noise as best we can, because a lot of what we hear and what we read it's not objective, it's subjective. It's opinion based. When we look at this is a great call here on that 3-day crossing over the 8-day and the 18-day predicted EMA, forcing this pair down from 110, ultimately pausing closing at the at the 100 mark, just below the 100 mark. So, another 1,000 pips to the downside for somebody who's just following these and applying basic intermarket correlations. That's what we want to do, right? So I think the dollar yen shorts definitely carry the edge well below 105.92, but it's going to be subjective to risk on and risk off scenarios. Now, as we move into our commodity currencies, I'm still very biased to the long side on the US Canada. As the Canadian dollar's seen some strength here, but that's based around a yearly cycle here where oil strengthens in May, June, July. So as we start moving towards the middle of July, the end of July, the Canadian dollar predominantly weakens. It doesn't strengthen. So longs still carry the edge. We can see last year at this time, you can see the US-Canadian pair aggressively moving higher from 1 year ago, and this is what we look for, is this type of seasonality. And again, I'm not saying we're going to move like what we did 2,000 pips last year at this time, and another great call by VantagePoint, I'll say, as it moved, and then we peaked up here about 146 or so, and then we've come back down, but the broader uptrend is still very clearly in play. So we want to look to capitalize on that. So right now our key VantagePoint levels, if we just bring this over so everybody can see it, and again, I like to identify these areas using our marker here so there's no misunderstanding what levels we're talking about. 128.68, that is our key support level. We are long a while above that area, guys. We've got additional levels here of 128.50, 128.92. We've closed up here at 129.97, and again, a lot of activity around that key VantagePoint level, 128.68. We've broken above there. Our neural index is a check, our strength indicator is a check, and our predicted short, medium, and long-term differences, check, check, check. So everything looks good. Our predicted MACD, I would like to see it back up above the zero line. I think we'll get there. And what I would like to see is the predicted RSI coming up for full support, 61.8. Again, using the RSI as a standard indicator as overbought and oversold is not one of the ways I like to use the VantagePoint indicator. The predicted RSI 61.8, we can see again a very similar signal. I'm just going to run it here so everybody can see it because I've talked about this in previous weekly outlooks. So when we connect the dots between these indicators, that led to a very substantial move from 128 to 132, 500 pip move on this, but very close to actually where we are right now. So, we look for this move to repeat itself. That's what the play is. So if this can get moving, we've got to get through this obstacle right here. We've got trend line resistance coming in about 130.50. We've got a swing high here at 132. If we can break above 132, guys, then we're on our way back to the 145 area. Now, I'm not saying that's going to happen, and I'm not saying it's going to happen next week, but there's a better than 50% chance that that's what's going to happen. That's what the market's going to do. We know that oil is going to start weakening middle of July, end of July. It's going to start softening again. And oil, for the most part, already is soft. So if that continues, then that's going to push the US-Canadian pair higher. Those weaker commodity prices, specifically the oil prices, they are going to have a very negative effect on the Canadian dollar. The Canadian economy, very much oil-based here, guys. How good the numbers are in Canada is based largely around oil. Until they move away from that, it has a very dramatic effect on the P&L of the Canadian government. So we'll keep an eye on this one, but for now, buying down into this 128.60 area remains the decent play, and staying long while above the 127 area just makes sense. And you can see we've tried to poke through that trend line here twice this week with my own direct clients. I've been advising longs while above 126.50, and that's come to fruition. I believe that this area will continue to hold. Now, as we come into our Aussie dollar, the Aussie is going to be, and the Kiwi is going to be a very choppy trade next week. It is dependent on what happens with these equity markets. The key levels here that I would watch for next week, right now the upside is 74.30, the key VantagePoint 18-day predicted EMA, 74.30. We've got 75.08 and 75.02. So this all represents, because we're closing down here, it represents basically it could coming soon, it could act as a resistance, but we have to close below 74.30 a couple of days in a row here to confirm this, right? So you can see we've broken through this wedge formation. Our trend line resistance was broken, and what I will point out here is we did not close back inside that former trend line. So believe it or not, there is a tiny bias still towards longs. The Aussie could turn, and it did take a pretty big beating on Friday, but not as big as one might think. So until we break below the 72.80 mark, longs still carry a slight edge, okay, a very slight edge, but it's the Aussie dollar is going to need those equity markets to recover. It needs the risk on scenario right now for Aussie for next week. 74.30, and again we've closed at 74.68, so we need to hold above 74.30. We need to close above 74.30 a couple of days in a row. Monday is going to be a choppy day, but Tuesday, Wednesday we'll have a good feel whether this pair can recover. And again, I still say that the whole Brexit thing is just a big overshoot on multiple markets, commodities, equities, currencies. The market has overshot the price here, and now it has to retrace. It has nothing to do with Fibonacci or Elliott wave. In my respectful opinion, it's just the market is again, it's gone too far in one way, an overreaction in thin, illiquid markets on Thursday night or early Friday morning in Asia trade, and again, we've got to be very cautious of that. So that's our setup for Aussie, and again, our indicators, I would absolutely agree on the Aussie, are overbought, but our predicted MACD is actually showing that we could be moving up. Our predicted differences here, they are moving towards overbought territory, but not yet. So we may have a little bit more of a corrective move on this pair, but if the global equities turn around, so will the Aussie, and so will the New Zealand. So once again, we see when we talk, we have to be very careful in our trading, because this is very easy to see when we're looking at order flow trading, or we're looking at basically grid trading, which is basically the same as order flow trading, just moderately different. We have sellers coming in here, and then we have buyers coming in down below. So right now we can see the question is this a false break here as we've moved up? Well, we've broken through that trend line, but we've managed to recover and come right back up to it. We're still holding above that key vantage point level. So if we bring this over here so everybody can see it, very important that we understand the critical levels, 70.40, okay? We've closed at 71.13. New Zealand came through the storm pretty good. It didn't come through, it didn't get pummeled like the euro. It didn't get pummeled anywhere near as bad as some of the other currencies. So it's holding its ground, and part of that is because of its high correlation, much like the Aussie, to gold. So if gold keeps going higher, that could indirectly support the Aussie, the New Zealand. Now I want to always make sure I advise everybody too that the Aussie and the New Zealand do not make up part of the dollar index. They pretty much stand on their own. They have some funny intermarket correlations, but they very often, follow those, like basically a risk on type of scenario. So if those equity markets can take a step back, and here's the other main risk we have for next week, is the central banks. They love nothing more than to prop up their precious equity markets. If that happens, then Aussie US continues higher, New Zealand US continues to move higher. Doesn't mean the euro will, doesn't mean the pound will, doesn't even necessarily mean the yen will, but there will be something to it if those equity markets recover. So once again, a very choppy week. I would strongly recommend to hold back on your trading till at least midday Monday.